Hey guys, what's going on? It's Rekt Capital and thank you so much for joining me in today's video update about the stock to flow model through the lens of historical depth crosses and what these depth crosses have done for Bitcoin's price action and highlighting to investors when Bitcoin is in a state of being undervalued, and these depth crosses are vital confluence for doing that. But we're also going to be talking about a very key indicator, not only in just identifying when Bitcoin is undervalued, but also when is that point of maximum financial opportunity looming large. Subscribe to the channel for more videos like this in the future. And of course, let's dive right into the video. So right over here, historically, whenever we see a depth cross, and you guys are probably familiar with this from a previous video that I mentioned about this, so feel free to check that video out, but very, very briefly, depth crosses tend to occur before Bitcoin's price action dips below this stock to flow line. As you can see over here, before the stock to flow line dips, and depth cross happens over here before we go below the stock to flow line. And the reason this matters is that whenever Bitcoin's price action is below the stock to flow line, this is when Bitcoin is most undervalued. And if we just look at these periods through time, you can notice that right now Bitcoin is on the cusp of a depth cross, but it's already undervalued in the context of the stock to flow model, which is very interesting because right over here you can see that period 3, when we got a depth cross, we only then later entered the undervalued stage under the stock to flow line. Same thing with period number 2. But when we compare to period number 1 and 4 and 5, you can see that the depth cross happened when we were already in a period of undervalued Bitcoin through the lens of the stock to flow model. And you can see that over here. We dipped below the stock to flow line briefly, and right over here in March 2020, we dipped below the stock to flow line as well. Although this cross is quite anomalous because we saw this depth cross occur when Bitcoin actually found its bottom and V-shaped reverse. So the most important thing to bear in mind is depth crosses precede periods of Bitcoin being undervalued. And it's a very interesting situation that we're on the cusp of a depth cross right now, and we already know that Bitcoin is undervalued through the lens of the stock to flow model. But now we need to watch out for how Bitcoin will be able to form a bottom below the stock to flow line. And this is what this video is all about, because historically you tend to see either a macro accumulation range form before the next macro uptrend. You either see a V-shaped reversal before the next macro uptrend. And those are essentially the two types of reversals you see, the two types of bottoming structures, V-shaped reversal over here, and then macro accumulation range right over here. So we're probably going to get one of the two. History suggests to us that we're going to probably get one of the two in this period number 6. We're probably going to see some sort of either a accumulation range or a V-shaped reversal. Can we exact a V-shaped reversal at these highs that Bitcoin is at currently? Many think that it's not quite likely that we see a V-shaped reversal. That will probably need to consolidate for a while in an extended range for Bitcoin to just gather up some steam before the next move up. And that seems quite reasonable to me. So if we just think about this V-shaped reversal or a macro accumulation range, we have to focus on a interesting indicator right over here that can give a lot of insight into whether Bitcoin is close to its bottom or not. And this is essentially the divergence indicator for the stock to flow model. It is a model variance, essentially speaking. And whenever we deviate beyond this line, this is when we enter a period of overextension in Bitcoin's price action relative to the stock to flow model. And during these periods, you see that Bitcoin's price action is above this stock to flow line. And in previous videos, I've been talking about how upside deviations beyond the stock to flow line tend to precede bull market tops. And you can see that clearly over here. The model variance is sky high. Right over here, we see a crash later on. Model variance is sky high. Then we see the end of the bull market. And same thing here. Model variance is sky high before the bear market. And right over here, even June 2019, which was a macro accumulation phase, we still saw that this model variance was in the red area, meaning that it was beyond this 0 level, meaning that there was some sort of overextension over here, even though that I think this isn't a valid overextension because this was actually prior to the halving, and the stock to flow model was really important through the context of the halving, or at least after the halving. We tend to see successful overextensions towards the upside beyond this stock to flow line after the halving. This was before the halving, which is probably why we didn't see that overextension perform a normal bull market top. In any case, beyond, or at least below the 0 point here on the model variance, this highlights to us the bottoms for Bitcoin's price action. And you can see here that while we saw a V-shaped reversal right over here, we saw a accumulation range on the, or at least a consolidation range, a double bottom and this sort of consolidation here. So this consolidation on the model variance was interesting to see when we're seeing actual higher lows in Bitcoin's price action. Really interesting to see that, because this is just giving us that confluence that there is a gathering tendency here, a bit of overextension towards the downside, but nonetheless higher lows over here. Great divergence, this sort of bullish divergence showcasing on the stock to flow model Bitcoin price and on the model variance itself. And over here you can see that Bitcoin's forming a accumulation range right over here below the stock to flow line. Same thing here, and then we reverse. And over here, when you just focus on this period, then we're actually getting bull market corrections bottoming out right over here before we see yet another accumulation range and an accumulation range here on the model variance. And now we're reaching a period which is going to be quite interesting through the lens of Bitcoin's current price action. So let's just create a support right over here. And historically, we've been at this support when we were in a bear market, macro accumulation range in 2018. We were at this support during those bull market corrections in 2017, maybe even dipping below, right? Dipping below that support. We didn't quite reach it in the 2015 accumulation range, but we dipped below it twice on two separate macro occasions in this period when Bitcoin's price action was below and retracing heavily, but below the stock to flow model, the stock to flow line. Really interesting support right over here. And ultimately, if we want to be a bit more broad about this, then this is going to be the point of maximum financial opportunity. When Bitcoin's price action retraces to a point after the death cross, and of course the death cross is probably going to happen, but whether or not we get that significant downside remains the question right now. But in any case, we're getting to the point where the model variance is now reaching its really climactic point, because historically we tend to see that this model variance reverses from this point right over here. So if we can just align Bitcoin's price action with this area on the model variance, that's when we get the point of maximum financial opportunity. That's when we've got that confluence that the Bitcoin bottom is nearing. And the fact that we're at this support right over here, deviation beyond to the downside, apologies, in Bitcoin's price action, but also in the model variance of the stock to flow model, deviation into this area will be very interesting to watch out for. But also the fact that we're already at this support is really interesting, because this is where the magic tends to happen, historically speaking, through the lens of the stock to flow model. So this model variance in confluence with Bitcoin's price action, that's how we're going to be able to find a point of maximum financial opportunity, because at this point in time, Bitcoin is undervalued. It is below the stock to flow line, and now we're just waiting for that bottom. That's what we're waiting for. And will that bottom be facilitated by the death cross? Because if we just look at these different periods, you'll notice that whenever we get a diff cross in these periods, Bitcoin's price action tends to dramatically go towards the downside after that diff cross. In 2014, that diff cross preceded 71% downside. In 2018, that diff cross preceded 65% downside. In 2020, it preceded 55% downside, but at the same time, in 2020 and 2019, we saw loads of death crosses and golden crosses that didn't really amount to much. So in a accumulation phase where these death crosses keep on oscillating, or at least these EMAs keep on oscillating and crossing and performing trend meaningless crosses, whenever we see this sort of happen in periods of macro consolidation or macro accumulation, then we're not going to really see too many valid crossovers. So really important to just watch out for the crossovers where we're seeing significant deviation in the EMAs and then converging to crossover. And it looks like this crossover is one of those crossovers where we're seeing significant deviation from the EMAs and now rapid convergence. So really important to watch out for this def cross. This is now a downtrending wedging structure. And I've spoken to you guys about this through the lens of the Wickofian distribution range. If we break out from this wedging structure, we could rally to higher levels such as 44, 45,000. It will be really interesting to see whether that def cross promotes this rebound, because def crosses actually manage to influence price in a way where we see relief rallies before actual continuation towards the downside. So loads of things to pay attention to going forward. That's why I'm going to be curious whether that def cross right over here for an undervalued Bitcoin, could that def cross facilitate a return or a bit more of a deeper dive into a model variance area that has significantly, or at least historically, preceded significant reversals to new macro uptrends and bottoming periods, this being the point of maximum financial opportunity. So Bitcoin through the lens of the stock to flow model is undervalued, but we're now looking for the point of maximum financial opportunity, and it's not too far away according to the model variance in the stock to flow model. I hope you enjoyed this video. Feel free to like it and of course subscribe to the video, or at least subscribe to the channel for more videos like this in the future. I hope you enjoyed this one and I hope you're enjoying your day today. Thank you so much for watching today. I'm Rekt Capital and I'll speak to you in the next one. Speak to you soon.